Steve, good to see you again. Jeff, nice to meet you. ETFs. Everyone's talking about ETFs. Talking about one in ETF. It's a big question out there in the market. And I know a lot of people like messaging me and they're like, when are we going to get an ETF? And I know we have one in Canada and Brazil, but people care about when are we going to get one in the US. There's a lot of interest in it. Anyway, before we get into that, Steve, you've been on my other show, Defiance. We talked about supply chains during the COVID crisis. It was a great show. It was good to talk to you back then. And, we hung out in Mexico last year, but it's good to see you again, man. Just introduce yourself to everyone so they know who you are.
Yeah, absolutely. Yeah, good to see you again, Peter. Hope to see you soon in person. My name's Stephen McClurg, the CIO of Valkyrie Investments. We are really focused on getting an ETF for Bitcoin here in the U.S. I've spent a lot of my career building and launching and managing ETFs. Some of them very difficult to do. So Bitcoin isn't the hardest thing that I've tried to do in the ETF world. But that's what Valkyrie's doing, along with a lot of other things. Managing assets in the same space.
Jeff, nice to meet you. Finally, do you want to introduce yourself? Let everyone know who you are.
Yeah, Peter, pleasure to meet you. And I'm coming right now from snowy Chicago. Hard to believe. End of April, here we are snowing. But we are excited. Stephen McClurg, we've known Stephen for over a decade, going back to his Guggenheim days. But we get excited at KKM Financial. And as the founder and CEO, we really pride ourselves on being a boutique asset management firm. We're headquartered here in Chicago. We're pretty deep into the ETF world. We utilize a lot of ETF model portfolios to provide investment solutions for our clients. And we get really excited about one of our models. And just a little tease here for Peter, for all the viewers and listeners, that we're going to really get into our model that really identifies companies that directly or indirectly hold Bitcoin on their balance sheet. We saw that universe a couple of years ago, maybe a handful, maybe a dozen different companies had that type of exposure. And now with this global adoption and the enthusiasm into cryptocurrency, we're seeing more and more names. We actually envision about 100 different companies being inside of that universe that directly or indirectly have Bitcoin on their balance sheet.
It's a big deal, man. All right, firstly, Jeff, I see a helmet behind you and a ball, and you're in Chicago. Are you a Chicago Bears fan?
I am a Chicago Bears fan, but the helmet you see over my shoulder is from the University of Notre Dame. Long time ago, Peter. I played for Coach Holtz in the 1990s.
Notre Dame, they've got the Irish connection, right?
That's right. Fighting Irish, baby.
Yeah, I'm half Irish. Well, I don't know a lot about football. I know the Bears have sucked for quite a long time, though, right?
Check. You're absolutely right on that. And we're still lost. It's like a ship just going in circles on Lake Michigan. But nonetheless, we're loyal here in Chicago, and we're hoping for the best for the Bears next year.
Sorry, man. You want to come and talk about ETFs, and here am I, a British guy, giving you shit about your team. But listen, look, okay. Steve, you know the kind of show I put together. Just for those who don't know, let's explain what an ETF is and like how they work.
Yeah, absolutely. First of all, I do want to point out that if you want a real football team, it's Tottenham, right? So,
wait, you better watch your mouth, man. Honestly, I'll kick you off the show right now. Me and Jeff can do this on our own. End it.
Yeah. So look, really, all an ETF is. It's an instrument that makes it really easy for people to buy various assets, whether it's a pool of companies that you want to hold, like the S&P 500, whether it's gold or silver. It's hard to go buy gold and silver physically, right? You have to go down to some pawn shop looking store down on the corner where they're selling you gold at really high prices and buying it for really low prices, and there's quite a spread there. But an ETF gives you ability to buy and sell it much more easier than a lot of other things. You can also hold various other assets, but Bitcoin is one of those assets that gives a lot more people access through an ETF if it were available.
Okay. I've got a few questions though. So, if it gives you the ability to we're really saying it's really the ability to invest in the asset rather than hold the asset. Because if you have a Bitcoin ETF, you don't essentially hold the Bitcoin. But we'll come back to the Bitcoin one itself. So if there's like a gold ETF, whoever runs the ETF, are they obliged to buy and hold gold reserves for the amount that people are buying? Or are these just paper investments and they can take the risk?
Yeah, they are actually obliged to hold the gold. So they're buying the gold and then they're actually holding it at a third party custodian, meaning that if something happens to that manager, then you have direct access to the underlying asset, the gold itself. But they do have an obligation to hold that, and it is double checked. That's why it's important in a fund like an ETF that there's a manager and then there's a third party custodian, and the third party custodian is that double check to make sure that everything that they say that they're holding is actually there. As a matter of fact, everybody's heard the news this last week of Bernie Madoff, passing away in prison, right? 10 years ago, everybody knew who Bernie Madoff was. And the really interesting thing about what he was doing was they were falsifying records and passing them out to people saying that, hey, here's how much money you have. Here's how much you have in assets with us. And that's how they were able to get the scheme going, so to speak, right? So all you had to do, if you were a client of Bernie Madoff's, was call the third-party custodian bank and verify that the assets match, and you would find out very quickly that they didn't. And that's the beauty of having a third-party custodian in a fund structure like an ETF.
So nobody checked in on Bernie?
Yeah, nobody checked in. I mean, I remember when I was a young analyst, reviewing over all of the various investments that we had at the company that I worked at, you would get custodian statements in the mail every month. And most people just get that stack of papers and toss it in the trash. And I would actually go through and compare the custodian statements to the manager statements to make sure that they match. I'm like, I thought everybody did that, right? I mean, that's the way I was trained. But apparently none of the people that were putting money with Bernie Madoff on behalf of their clients, by the way, were actually doing that, or they would have caught him.
Stephen, Peter, I got a fun story about those trade tickets real quickly. There's an asset manager here in Chicago, late 1990s, when Bernie Madoff was really just getting going. Well, typically, to Stephen's point, when you do see those trade tickets, they come in pretty randomly, Peter, right? You get a whole host of trade tickets on what transpired in your account, and it's really disorganized. Well, Madoff would send these trade tickets to this specific client here in Chicago, and they were all square, nice with a little bow on it, just way too organized, way too neat. That set up a red flag. That specific entity or person, I should say, in Chicago, I can't name them, of course, they decided it was too neat, it was suspicious, and they exited. They were made fun of for about the next decade because Madoff went from about $1 billion to $2 billion up to $65 billion. But sure enough, his suspicion, his spidey senses were right that they were way too organized. So if something doesn't look right, or I should say here in Chicago, if it smells like a rat, looks like a rat, it's a rat.
So you're saying with an ETF, someone can actually check that they are holding?
Well, that's the beauty of an ETF. So this is really fascinating. You rewind 20 years ago when BlackRock kind of launched iShares, the ETF company. So think of an ETF, because this really is the intersection of traditional finance, and we have new Bitcoin, cryptocurrency finance kind of intersecting here. But an ETF, I like to think of as a basket. So let's use the S&P 500. Everyone's familiar with the S&P 500. That's a index that's created of 500 companies. So instead of individually buying those 500 names and properly weighting them, because that's a market cap weighted index, which basically means the biggest companies have more of a weighting. So that market cap weighted index, you would have to spend a lot of time to really allocate. If you were to buy an ETF, SPY, that's a basket. Right? That's the vehicle. It's one basket and all 500 names are in there. So with one click, you can buy SPY, which gives you the exact same mirror or correlation as a congruent line to the S&P 500. So what the ETF vehicle has really done, it's simplified the process, but you have full transparency in that ETF to see the underlying or to see in that basket. And that's what really provides transparency for investors globally to understand. And that's what's the beauty of the ETF. They're low cost, they're liquid, they trade, they're very tight bid offers. So it's just a superior vehicle where we get excited. You're seeing trillions and trillions of dollars of growth every year going to the ETF space. And now obviously we're focused on having that ETF vehicle, that ETF basket, provide that investment solution for Bitcoin demand globally.
But listen, look, if I go on and buy what are you buying? A share in an ETF? You're buying, look, how does it work?
You can even buy fractional shares now, right? Stephen, talk to us about fractional shares. It's really gotten interesting and tremendous for small investors as well as institutional investors.
The interesting thing about an ETF is when you buy a share of an ETF, you have ownership of the entire pool underlying. And not only do you have ownership of that, you have the right to take a distribution out of it. If you can either trade your shares in, right, and sell it to somebody else, or you can say, hey, I want to give you my shares and I want to take the thing that's underneath it that represents my shares. And you have the right and they have the obligation to give it to you.
Well, hold on a second.
Within
Sorry. We're going to have more questions than answers at this rate. Okay, so if I go and buy a share of an ETF, or say I buy, I don't know, 100 shares of the ETF, at the point I buy that, do they trigger themselves a purchase of all the underlying assets to cover that?
That's exactly right.
Yes.
Right. Okay, so they instantly purchase, and if I sell, they instantly sell.
That's right.
Correct.
Okay, and do not trading fees not get in the way for them? Yeah, how does that work? Because if lots of people are buying single shares, surely that's going to be annoying.
Well, what's generally happening there is the ETF provider is working with several traders behind the scene, and because there's several people buying the ETFs on a single day, what you do is you create more units of it. So let's say that there's $10 million worth of demand for an ETF in a day. That means you create $10 million more of that ETF. So they then go behind the scenes and process all of those trades. But yes, trading fees do work into that, but you're buying it in bulk. Therefore, your trading fees typically get smaller than what, you and I, if we're just buying $20,000 worth of Bitcoin or Apple stock than what we would see.
Yeah, to add on to that, Stephen, you look at a typical ETF, there's an expense ratio, what it costs that end user. Like if I was to buy SPY, that costs 0.09 basis points. So think of a typical financial advisor. They charge their client, let's say 1%. That's 100 basis points. To buy an ETF, it'll fluctuate. You'll see really low cost index ETFs, talking about 9 basis points, all the way to actively manage. Look at Kathy Wood at ARK. She charges 75 basis points. So it runs the gamut, and I think it's really correlated to the management component. So if you see an actively managed ETF, that's going to demand a higher fee because of the active management and the secret sauce. If you just have an index-based ETF, it's going to be a lower cost ETF.
Okay, so does it essentially, they're not actually buying and selling instantly at every moment? Are they just clearing at the end of the day the buys and sells?
That's exactly right. That's what the manager is doing. Now you're trading it all day long, and you don't see what's going behind this. You don't see the sausage being made. But at the end of the day, all the new creations or all the new redemptions is all cleared by the manager.
But to be clear, you the client, you the investor, you're getting that exact price in that exact second. It's not like a mutual fund where you get the end of day pricing. You are getting that exact price. So if you see fluctuations, like let's rewind a year ago when we saw 10% swings in the marketplace, in the equity markets, when it's going up and down 10%, contingent upon when you press click and buy that ETF, you're getting that exact pricing.
But you're saying, Steve, I can also go and demand, I can give back these shares and I can demand the underlying asset. So if it's shares, I get all the individual share certificates that make up the basket?
Yeah, so typically what happens is in a redemption, this is called a redemption process.
Yeah.
If you say, hey, I want to get those back. I want to get everything underlying back. You can either get it through the cash value of what you're asking it back for, or what they call in-kind contributions, meaning the actual underlying.
So I actually get the share certificates?
You absolutely can, yes.
Even if I was buying a fractional share and all the individual of like the S&P 500 and I was spending like $25, I would get all the 500 individual fractional.
Well,
share.
the way that it actually works is there are limits, and typical limits on ETFs are $2 million, $2.5 million, sometimes $5 million. So if you have that much, then yes, you can if you're buying, if you have the S&P and you demand all the underlying back, then you'll get $2.5 million worth of all the S&P stocks. Now, because that function is in place, what it does is it keeps the ETF trading at a very close price range and value to all of the underlying shares, right?
Because if there isn't, there would be an arb.
That's exactly right. Yeah. Think about the Grayscale Bitcoin Trust for a moment, right?
Yeah.
we saw this massive premium, right? And everybody thought that that was normal. Oh, it's just because of demand. Well, it's not because of demand. It's because grantor trust, which is the structure that Grayscale is in, doesn't have a mechanism to redeem your shares. So it's like a casino. You can buy in. You can't really take the money out. They get all the money. You walk away empty, right?
Hotel California.
That's even better. But what's happening now with the Grayscale Trust is it's trading at a massive discount. Yesterday, I saw a discount of 12%, meaning if you own it, then you own 12% less of what you think you own. If you were to trade it, because there's no mechanism to arb that.
Yeah.
So that's what makes an ETF superior to that type of structure.
Fine, but with the Grayscale Trust, I imagine in a scenario whereby they get an ETF approval and they've talked about converting the GBTC into a ETF at a 12% negative, that would be a good buy. That would instantly get swallowed
I
up.
agree.
Yeah,
I agree.
So are you therefore surprised that there is this negative on the GBTC?
I'm not surprised at all.
Okay.
I used to manage these vehicles called closed-end funds, which are very similar to the Grayscale Trust. And closed-end funds trade at a natural 8 to 12% discount to the underlying, just because of the illiquidity discount that you get. It's very difficult to arb. You don't have a redemption feature. So that's the natural discount. So 12% for Grayscale. That's probably what it should be.
All right. So going back, me as Pete, little poor trader from England, if I'm buying my fractional shares, I don't have the opportunity to transfer it for the underlying asset because there's a minimum value. But I can still buy an ETF, right? But you've got to be a big spender to be able to redeem it for the underlying asset.
Yeah. So you can buy and then you can sell them, but because there are big spenders that are actively making that arb trade, when you're buying and selling, your discounted premium is very, very small. We're talking a typical band under 50 basis points.
So do you imagine when a Bitcoin ETF finally gets approved that it will be exactly the same scenario, that someone will be able to redeem it for the coins?
They absolutely could.
Wow.
Within that certain range, if it's $2.5-5 million.
That's really interesting. Okay, so let's talk about the Bitcoin ETFs, because there have been, what are we at, like 20 applications now?
Yeah, exactly. What is there, like 8, Jeff?
I've lost track of toes and fingers on counting them, but yeah, I think we are right around 9.
Yeah, plus you have 4 in Canada.
So what do you think the holdup is? Why do you think the SEC is not approving these?
What I really think happened was when the first round of applications went out, 3, 4, 5 years ago, there was a lot of questions about Bitcoin at that time. And then there was a big run up in the market and the big crash in the market, crypto winter.
Freaked out the regulators.
Yeah. So there was a lot of hesitancy there. And I think there was a lot of questions and comments on those Bitcoin applications that really dug the industry into a hole that's very difficult to get out of. So we're now in the process of trying to answer a lot of those questions and comments and to prove that this is, a legitimate digital currency. And that's something that we've been working on. It's something I've been working on for 3 years, but with Valkyrie, it's something we've been working on for almost a year now.
So with all these different applications, as you say, Jeff, there's 9. How much can they actually vary from one to the other in terms of what they are, what the structure is, the technicals to it?
Well, I think there's certainly nuances in the application, but you're right. Fundamentally, they're going to give you direct exposure to the fluctuations in the price of Bitcoin. But I think what the staff, the SEC, has really looked at, and let's rewind when we saw a lot of those initial rejections in 2017. The initial apprehension, I believe, this is my opinion only, what I believe is that the staff, there's a separate committee called Markets and Trading. They were trying to understand the depth of liquidity, and that's dramatically different. And so it's a maturity component, Pete. We're seeing the maturity of Bitcoin. We're seeing the CME group, where I became a member in the late 90s. The CME group, which trades all the futures, You're seeing futures in that market now approach 30,000 futures a day. We go back to 2017, they weren't even at 3,000 futures. And that's when they still had the CBOEs, mini contracts. So I think the fact that now the CME group has the 5-coin future and they also have the 1/10 micro. So if you want to trade futures or potentially hedge, if you're a hodler, you want to hedge, you can now use these futures. So this is just a bigger picture of the maturity process. So I think we're in a very different predicament in 2021. And that maturing component, I think that is the overarching theme, which will get us over the hurdle and approve. But which Bitcoin provider or issuer or application is going to win? Well, that's the $1 trillion question. But I do think cost, I do think expense is going to be a big difference. And it's also the trading mechanism. We'll all be approaching the ETF the same. Does that application potentially have the resume to be trading that ETF? So there's a lot going into the formula here on who's going to be the winner. But I think it's an open market, and we get excited that we thought this conversation, Steve and I have been talking for years, we thought this was a 2022, potentially 2023 conversation. With the maturity and the price of Bitcoin and cryptocurrency being adopted globally, now we're seeing our brothers up north in Canada have these Bitcoin ETFs. So I think the time is now. I don't know if it's Q2 or Q3, but we get really excited just about the enthusiasm, but the maturity, I can't stress that enough, the maturity of the Bitcoin product from a futures product as well as a global adoption, that's the difference maker. And that's what's going to be the catalyst, I believe, to get the approval.
Okay, but wasn't one of the other big reasons the SEC was rejecting ETFs was also worrying about manipulation in the market? Where do you think we're at with that?
I think that go ahead, Stephen, because that's really important. I think what you're looking at, I'll let Stephen take that one because he's pretty deep in the weeds on understanding that.
As we all know, when anytime that there is a lower market cap asset or an asset that's just very small, it's very easy to manipulate it. For instance, look at small cap publicly traded companies that are trading on the pink sheets, right? They're very easy to manipulate. And for that reason, the SEC only allows a certain percentage of those small cap companies into an ETF. It's plain and simple. They're easy to, if there's a big order that comes in, it can really move the market in one of those small equities. Now, larger equities like Microsoft or Apple, they're a lot harder to move, and it takes a lot more money to move the price in that. Now, everything is manipulable, right? And people will certainly try to manipulate anything, even large cap equities, the entire market, LIBOR rates. I mean, there's a lot of things that can be manipulated, but the larger that Bitcoin gets, the harder it is for somebody to come in and drop $1 billion to move the market, right? It takes more and more money to move Bitcoin by even a percentage point. It's still possible, but it's now at that size where it is very difficult to move it. And that's why we haven't seen, this weekend we saw some big price swings in Bitcoin, of course, and other crypto assets. But that's probably one of the biggest price swings we've seen in a really long time. And on a comparative basis, it wasn't even that big, right? I mean, yeah, we went from like 60 to 55. Oh, I love the swings, man.
Dude, I'm a psychopath. I see it drop 10 grand and I laugh. I fucking laugh now. I don't know about you. I laugh. I don't sit there and go, oh God, my net worth. I just laugh.
Yeah, no, exactly. You have to, right? You've been around this industry long enough. It's funny, right? In a lot of ways. But I happen to be up. I was like, I'm an old man now, wake up and go to the bathroom, 3 times a night, right? So I'm looking at my phone and I'm looking at my phone. I'm like, oh, what just happened? I'm buying. So middle of the night, I'm going to my computer, buying more Bitcoin. It's great. I can't help myself.
Buy the dip, man. Buy the dip. All right. So listen, I think one's coming from the people I've spoken to who are involved in this, and there's a few. Most still feel like it's not this year. Most feel like it is like something for 2022. I know, Jeff, you mentioned maybe 2023, but most of the indications I get, like, it's probably not this year, probably 2022. But either way, there's 9 in the market. There's a massive advantage to being the first. How the hell does the SEC even pick one in a fair way? Is it a case that they really, if they approve one, they have to approve them all at the same time? And floodgates open, or do you think they will just allow one?
I think the first criteria is they're looking to see how handsome their chief investment officer is, and the beard that Stephen has certainly is an uptick. But Stephen, what do you think? What's the leading criteria that the staff is looking at?
And I've been through this several times. I mean, I remember filing an ETF back in my Guggenheim days, and PIMCO had a similar one, and BlackRock had a similar one, and it was like, okay, who's the SEC going to choose, right? And different things happen at different times. Sometimes they'll kind of release the Kraken all at once. Sometimes it's based on who filed first, and then sometimes it's based on structure. Who had the best structure, who had the best arguments. So all of these things are a factor. I personally believe where the highest odds are is, so look, in this current round of applications, you had Van Eck, then you had us,
Winklevoss,
and then you had Wisdom Tree. And I truly believe that the SEC will probably, and I'm not trying to predict or trying to put anything out there, but I think that us, Van Eck, and Wisdom Tree are probably the first batch, just based on timing.
I've been speaking to the guys over at Van Eck. I've spoken to Gabble quite a bit. I mean, it feels like, is there something with Van Eck in that they've run so many different types of ETFs anyway, or are you all like this? Because I know they've got like a long track record in ETFs.
Yeah, that's right. I mean, look,
would it be like the SEC?
Jan Van Eck.
Yeah, would it be like the SEC trust them guys? I think that's a nice, smooth, safe one to start with. And also, would it be a case, because Bitcoin is still highly controversial, it's still one of those things that people look at as kind of a bit weird and a bit odd, that they might just want to approve one and see how it goes?
I don't think they'll approve one to see how it goes. I think they will. If they do, I think they might approve, the first one, and then a week later approve the second one that was on file. Then a week later approve the third one was on file. That's also a high probability scenario.
What do you think? How big of a game changer is this really? Like, I know this makes it easier for people to invest in Bitcoin who maybe can't go and buy the underlying asset, or they're a bit unsure about buying the underlying asset. They're a bit unsure about technically buying Bitcoin, custody in it. I know it makes it a lot safer for them. There is that scenario, but there are other scenarios I wouldn't be aware of. Like, the fact that the ETF exists suddenly means that it suddenly appears on all these different trading platforms and trading websites, that there's so much more access because of that.
There's access, and then there's comfort level, right? I mean, look, Peter and I, you and I have been around for a long time.
Hold on a second. Hold on a second, man. How old are you?
He just brought you overboard, Pete.
Yeah, Jesus, man. How old are you?
I'm 46. How old are you?
42. You've been around a lot longer than me.
No, but you've been around longer than me. You've been in Bitcoin longer than me, right? And that's actually what I'm. I think so. When I came in, you were already doing podcasts.
Well, maybe. All right. I forgive you if we're just talking about Bitcoin. I think you meant live.
Well,
Jesus, I'm already feeling old and going grey.
Exactly.
Watch this guy.
Yeah.
All right.
But,
go on, man.
Yeah.
Let me jump in real quick, Pete, because I think you're absolutely right. You and Stephen talking about the retail, the apprehension, the ability, the access. But the one piece of the puzzle, which I go back to this intersection of traditional finance and cryptocurrency, the real component that no one's really talking about is that there's all these endowments, there's all these pensions, there's all these different companies that have policies and procedures. Inside of their policies and procedures, all that ability that allows them to invest, there's no ability for them to invest into Bitcoin currently. If there's an ETF, all of a sudden they can invest in ETFs. Now you're lighting up a whole new global vertical that can access Bitcoin, which they couldn't before. So think about, if you're at your favorite amusement park. Do you guys even have amusement parks over in England? We have a ton of them over here.
Yeah, we have Alton Town. We don't have Six Flags? 8 Flags?
Six. Okay, but you got that.
We don't have
soccer stadiums. Okay, but anyways, think of 10,000 people sitting outside the amusement park trying to get in. That's the institutional investment community. That's all the endowments. That's all these institutional investors who can buy an ETF, but they can't for whatever reason because their policies and procedures can't buy Bitcoin. So that's where I think that's the next leg higher. That's 100K Bitcoin in my mind. And that is subsequent to a Bitcoin being approved in the US. Bitcoin ETF.
Right. Okay. Yeah, Jeff, what's how long have you been in the Bitcoin game now? Like what's your kind of thesis?
So I've been in Bitcoin probably about 5 years. Stephen pulled me in a little bit deeper about 2 years ago, but I was over in Europe with John Nigerian back in 2017. We did a little tour talking crypto, specifically Bitcoin. So I'm not a newbie, but I'm by no means anywhere near the experience that you guys are. So I get excited because I have a background. I started my career, I started trading in the pits in the Chicago Board of Trade, which got bought by the Chicago Mercantile Exchange. So I traded treasury futures, interest rates, right? The deepest and most liquid futures contract out there. So I've taken my experience from the floor, my floor operation, turned it into an SEC registered investment firm. And now all of a sudden we're trying to bridge that. So yes, I'm wearing a sport coat. I took off my tie, Pete, because I know Stephen would give me crap if I was wearing a tie on here. I'm usually wearing a tie on CNBC. But I am kind of, I get excited about this narrative of cryptocurrency and traditional finance and kind of blending in between. So it's truly Main Street, Wall Street, where I've been probably considered more Wall Street for the last couple decades. But here I am trying to understand, and I've been an early adopter in this traditional finance, that you do need exposure to some extent to cryptocurrencies. And once people get educated on blockchain, both.
No, dude. It's Bitcoin only.
Steve, it's Doge Day.
You're not holding this shit.
What about Dogecoin? I mean, it's Doge Day itself.
Are we gonna get a Dogecoin ETF?
Not over my dead body.
Wouldn't that be funny if we got a Doge ETF first? That'll kick me. So, sorry, Jeff, I got to ask you something. You worked in the pits, like in those films where you see everyone yelling at each other and like throwing tickets at each other,
sweating, swearing, elbowing. Yeah, I was in there for over.
Is it just like that?
Yes, but probably a little bit more, a little nastier. So a very competitive environment. I use my football frame to really establish a position in there, and it's competitive. It's high energy, and it was a great spot to learn risk management. And when I was able to take what I learned over a decade of having a floor operation in the pits, translate that into more of a family office off the floor trading. But it's great now because we were one of the earlier adopters. Once everything started to go electronic, and this is probably confusing to some folks, but you couldn't trade 10-year notes. You couldn't trade 30-year bonds. You couldn't trade a lot of stuff electronically. There was only the pits. So everyone in the world, doesn't matter what language you spoke numbers, right? And those numbers would come into the pit. And I was one of the market makers that provide that liquidity. So taking that and transitioning into the electric world, the electronic trading world, it doesn't matter if you're trading crude oil, it doesn't matter if you're trading Bitcoin futures, doesn't matter what you're trading. That was the bridge. And I think that's where people are really growing upon. So you're seeing a lot of people who used to trade S&P 500 futures, used to trade equity, stocks. Now they're walking away from trading those products because the volatility that you talked about earlier, people get so excited and they flock. It's like a moth to a light, specifically in Chicago. Traders love volatility. So that's where Bitcoin, I'm not going to say cryptocurrency.
Yeah,
Again, I know you're going to mute my microphone, but that's where Bitcoin gets so exciting.
You too. Jeff, no, sorry, I've got to ask a bit more about the pit because all the way back to Trading Places, first time I saw it.
Yes.
And every time I've seen it since, I mean, they still had it in The Big Short, right? You still had the pit in The Big Short, right? Like, I don't understand. Like, do they still have the pit today?
They do. They do at the Chicago Mercantile Exchange called the CME Group in Chicago. The pit is still there. COVID has kind of changed that dynamic.
What the hell's going on? I don't get. I see it. Are people literally just trading with each other? That's it. Is that all it is? Is it just like trading online, but two people together?
No, it's not. So like the Eurodollar options, which is the largest pit in liquidity, there's more volume in the Eurodollar options pit than there is in any other product in the world, even more so than the U.S. Treasury market. So that pit, you'll have 500 guys in there still. 500 guys in there. A lot of them are headsets, but the big institutions, the big traders, instead of going to the screen where a lot of what we call electronic trading, we call it the screen. So instead of going to the screen where there could be some manipulation, there could be some spoofing, right? Instead of having that ability, they want to call into the pit and get a bid and an ask, get a quote to potentially move $1 billion of notional, and they can do it like that because there's 500 people competing, and that competition really tightens up. There's no, it's not loose. Sometimes on the screen, it can be moving around a little bit and manipulated. So I think the big banks, the big institutions, the big traders, the big hedge funds, they still want the pit in certain products to exist because it gives them a more fair, level playing field. That makes sense?
Yeah, no, it makes sense. Steve, have you worked in the pit?
Never. I was a boring bond trader sitting at a desk in Santa Monica.
It's so boring. Well, you're in Santa Monica. You're probably out surfing.
Yeah, exactly.
Jeff, can I ever go and see a pit? If I come to Chicago, can you get me?
Yeah, man, get in here. I got you. Right. We'll give you a nice little tour, and I'll have Steven pump in some orders. I'll get you a jacket, my man. You bet.
Fucking hell, man! I'm so excited. I've been to Chicago so many times. I love that shit. I want to go. I want to go and see it. All right, so listen, look.
Here, we'll even one up that, Peter. Peter, real quick, we'll one up that. Okay.
All right.
When we launch an ETF and we ring the bell, we're inviting you to the bell ringing ceremony.
And you'll be wearing a smart looking jacket.
Do I have to wear a smart looking jacket?
No. We'll get you a badge. We'll get you a trading jacket, an old school trading jacket. You tell me your color, and we'll get that sucker made.
I'll have to borrow
what's your badge going to be?
My son.
What's your badge going to be? Mine was KIL, KIL. That was my badge. So every time there was a trade, someone would write KIL. What would your badge be? You got to think about that shit.
Yeah. I'll go for BTFC.
All right.
Yeah. You can figure that
We'll get it made.
I think Steve knows what that is. All right. I want to see this. Yeah, you know, man. So when your ETF, so when an ETF gets launched, right? So I know with when a company IPOs, they get listed on a certain stock exchange, right? Yeah, it might be NASDAQ or whatever. With an ETF, is it similar or is it just everywhere?
So you launch on a different exchange, and the three major exchanges right now are NASDAQ, New York Stock Exchange, and then CBOE even in the United States is probably the third. And you choose an exchange that you list on, but they all trade with each other. So what will end up happening if you go into your Charles Schwab account or your TD Ameritrade account or whatever online brokerage you have, they'll see everything listed. It doesn't to the normal person. Nothing looks different. But to us, which exchange you list on does matter. Different ones have different features that are important. But if as long as you're listed on one of those top three, you're pretty good.
Right. Okay. All right. So there's not only Bitcoin ETFs coming right there. You've got another ETF you were telling me about, Steve, based on companies invested in Bitcoin.
Yeah. So there is a filing for the Valkyrie Innovative Balance Sheet Fund, and I'm going to hand that over to Jeff to talk more about.
Sure. So we can't talk about the ETF. We can confirm that there certainly was a filing for the Valkyrie Innovative Balance Sheet ETF, where KKM, we are the investment advisor. But what I can talk about, Pete, is the model portfolio that we developed at KKM, this Valkyrie Innovative Balance Sheet model portfolio that holds a basket of stocks. So we get excited about that basket of stocks and think of the correlation of these companies that have Bitcoin on their balance sheet, either directly or indirectly. But think of the PayPals, think of the MicroStrategies, think of Square, but also think about some of the new companies that you're hearing come in. It's Domino's Pizza. You heard Slim Jim during their earnings last week talk about owning ETH. So it's all these companies that are now coming to embrace the fact that they want to have Bitcoin on their balance sheet. PayPal obviously set off the whole parade of companies getting into the game last October when they talked about allowing their 350 million users to transact in Bitcoin. So our model, and I can talk all day about the model, but the model does a great job identifying that. And historically, the model portfolio has had about a 0.6 to 0.7 correlation to the price of Bitcoin. What the hell does that mean, Killer? Well, it means that about the 70% of the move is captured on the price of Bitcoin with these names because of it. So if you think of Tesla, obviously it was a big deal when Tesla came out and talked about their $1.5 billion, which is probably about $2 billion now, right, Steve? Maybe $2.5 billion worth of Bitcoin. So when you have a model or a theme that can really hone in on companies that have direct or indirect balance sheet exposure, that gets exciting because that's, again, Pete, that's a bridge for a lot of companies out there, a lot of endowments, or even some of retail investors who have apprehension or don't have the ability to invest in Bitcoin. This is a bridge. They can invest in single companies, exchange-traded companies that have that exposure. So we get excited about this theme of our model portfolio, which is the Valkyrie Innovative Balance Sheet model.
So this model sounds interesting, I think, for two reasons. Firstly, while we wait for the SEC to actually approve a Bitcoin ETF, this is what we would call kind of a Bitcoin ETF, I would say, because like I know some people who wanted exposure to Bitcoin were buying MicroStrategy shares, and quite often MicroStrategy was referred to as essentially an ETF. Their shares were essentially an ETF. So, but there's a second thing that's quite interesting about this model. If you're someone like me who perhaps wanted to just say I wanted to diversify a bit, I want to get a little bit outside of Bitcoin, I might want to invest in companies like Square, like Tesla, because I think they share my worldview. They share my outlook. So I think there's kind of two things going on there. Have I captured that right?
Yeah, you hit the nail on the head. And that's the biggest piece of diversification. So this model portfolio, primarily, we're honing in and identifying, and we utilize Valkyrie as our research partner to really help us better understand. But there is a piece of this model portfolio that has a speculative component. So these are companies that we believe are going to incorporate Bitcoin either directly or indirectly on their balance sheet. So this is a little bit of a speculative prediction, if you will, because we just see this universe growing. We thought conservatively at the end of last year, we'll see 50 or 60 different companies in 2021 really embrace Bitcoin, either directly or indirectly on their balance sheet. That number now is going to be closer to 100 and it may vault 100 by the end of the year as we're seeing the price of Bitcoin continue to move higher. So yeah, you're absolutely right that this is a diversification. It's a parallel line. Even if there is a Bitcoin ETF out there, this is another way to have some diversified exposure to the space and to the companies that are kind of the first movers into Bitcoin on their balance sheet, or maybe they're paying their employees in Bitcoin. That's going to be a big deal.
I guess also it's a lower risk investment than the directly investing in, say, a Bitcoin ETF as well, because these companies will be generating revenue, they're cash generating businesses as well. So it's a slightly different risk profile from just a strict Bitcoin ETF.
Yeah. A good example of that is there was the announcement that Barclays will not allow any of their advisors to put any of their clients into Bitcoin or even MicroStrategy because it holds so much Bitcoin. And there's other large.
Yeah. So I saw it the other day. HSBC, a guy showed me literally a tweet. He tweeted out to HSBC, and they said they won't allow him to buy Coinbase shares.
Yeah, that's right.
What the fuck?
Yeah. So I mean, there's such a massive restriction from so many of these banks that won't allow their advisors to buy Bitcoin. What we see this as, though, is potentially a softball, where some of these people that are a little bit more on the fence might want their clients in that as opposed to something that's pure Bitcoin.
Yeah, it's fascinating. How do you choose the companies, and how do you choose to weight the balance of the basket?
No, Pete, you just want the secret sauce of our model, my man.
Yeah, of course I do, because I was going to launch my own, dude.
I'll give you this. I can't give you too much, right? This is the secret sauce, but
yeah, because you'll tell Gabor.
Yeah, I tell Gabor. Aren't they? Did I see they announced one or something similar?
Yeah, so they have an ETF that is focused on companies that are in the crypto space. Right, or blockchain space. We only want Bitcoin. We only want Bitcoin on the balance sheets. Yeah,
because you're proper Chads.
That's right.
That's right.
Bloody love it.
Yeah, well, fuck theirs then. I'm all about yours. Okay, so you're not going to give me the secret sauce.
I'll give you a hint. So
all right.
We will, half the portfolio could potentially, of this model portfolio, half of the portfolio could be owned in 5 names with a maximum weighting of 10% of those names. So 5 names potentially could be at 10%. There's half. So that's all I can give you a secret sauce. You got to come to Chicago for the rest.
Yeah, Tesla, MicroStrategy, Square, PayPal. I'm just guessing myself. I'm not even looking at you. PayPal.
Well, we do run this in separately managed accounts. So if you want to open up a separately managed account, my man.
Coinbase. I reckon that's the 5. We'll see. We'll see. You can let me know if I get that right.
Can neither confirm nor deny that those are the 5.
If that's all 5, and that
if I wink once, you're yes. If I wink twice, it's a no. How about that?
Yeah, we'll take it. I'll take it. All right. So when do you think this one's going to launch?
Great question. We're waiting to hear back from the SEC, so that's probably all I can really say on that. So we get excited about the model, but we'll just go on that.
All right, fair enough. Well, we'll keep an eye out for that. So back to the traditional big Bitcoin ETF, which everyone cares about, everyone wants. I'm aware of 2. I'm aware of the Canadian ETF and there's the Brazilian ETF. Are there any more, or is that it? Is that the 2 that are in the market?
Yeah, those. To my knowledge, those are the only ones that are out there that are a pure Bitcoin ETF. There's a few. There's a few that are variations of it in Europe, but nothing. Yeah, ETNs, but nothing like what we have in Brazil and Canada at the moment.
Okay, in terms of like trading of the Canadian and the Brazilian ETFs, have they given you any indication of the pent up demand that there is for these?
It has. So back in my traditional finance days, we operated a business, a large ETF business in the United States, and a small business in Canada. And anytime that you would launch an ETF that was a very similar, brand new type of ETF in the US and Canada, the US is 50 to 100 times the size of what you would get in Canada. It truly is a much larger market, a much deeper market. So if you're getting $1 billion in the door right away in an ETF in Canada when it launches, imagine what it would be in the United States. I think it's a $50 billion market, quite easily.
$50 billion.
Yeah.
Well, just think about it, Pete. They have to get off their horses in Canada, go down to their computers and click. So we don't get off horses here in the United States. So it's a lot quicker and a lot more money.
Yeah.
Don't you guys own Chicago, Canada, by the way?
What?
Don't you guys over in the UK? You own them.
No, we don't own them. We still just rule over them with our queen. Okay. Well, listen, I didn't think you were still on horses in Chicago.
No, we are not.
It's not Texas. It's not Texas, baby.
No, we're in Teslas.
We're in Tesla. You're in Tesla. I do like Chicago. I need to get back there, man. Let's
do it.
All right, man. This all sounds amazing. It sounds like this really is the floodgates. This could be the next big leg up. And I'll tell you what's quite interesting about it. Firstly, I don't want it to happen this year because I've got a bet with American Hodl that Bitcoin's not going to hit 300,000. We've got a half. I don't know if you know that, Steve. We've got a half Bitcoin bet. So he thinks Bitcoin's going to hit $300,000 this year, and I think it isn't. So we've bet half a Bitcoin on it, right? So I definitely don't want these ETFs till next year. So if you can save them to around like January 3rd, January 4th, that would suit me. But actually, one of the interesting aspects of this is like everybody's looking at Bitcoin like it's very cyclical. If you look at the last few halvings, the cycle's always been the same: about a year to a year and a half of bull market, and about 2 to 2.5 years of bear market. And we seem to be going through the same. A lot of people thinking, well, it might come to December and then we'll dump and we'll go to another bear market. But I also did an interview with Dan Held where he talks about, no, we're in the Supercycle, potentially. If ETFs start dropping next year, that will change the bear market scenario, right? That will upend that probably or could upend the traditional cycle of Bitcoin.
Yeah, I think it could. I think what we're experiencing right now is a massive deleveraging. I think Bitcoin kind of hit that stride where a year ago it was at 4,000. And
deleveraging in Bitcoin or deleveraging in the market, traditional markets?
Deleveraging in Bitcoin. So what happened was Bitcoin shot up to 25,000, and on that momentum trade, a lot of people levered up the Bitcoin that they already had to get even more Bitcoin to buy into it, or they went down to their local bank in England and got a loan to buy a car, but put it in Bitcoin instead. So there's a lot of different.
I would not advise anyone does that. By the way, that sounds like a moron's idea.
It sounds terrible.
Who would do that?
But there was a lot of leverage put into Bitcoin in various different ways that really pushed it up to that $60,000 range. And what we saw over the last week has been this deleveraging, right? You're not, if Bitcoin's not, going straight up anymore, and it's been hovering around that $60,000 range, people are starting to delever. We saw a massive delevering on Saturday. There was some false news that came out. It caused the price to go down just enough to trigger a lot of stop losses for people that were levered up, which caused it to go down even further. Then it popped back up, but now you're still getting, and a lot of that deleveraging, by the way, was in Asia, right? Asia over the weekend, and then delevering here in the United States yesterday.
And you saw some of the enthusiasm, Stephen, some of the enthusiasm of the Coinbase direct listing. You definitely saw a price anticipation, a price move higher in the price of Bitcoin. So I think once that kind of enthusiasm waned a bit, I think that also was a catalyst.
Yeah.
Right. Okay. So it sounds to me like a deleveraging is kind of a healthy event.
Yes.
And if the market heavily deleverages, but we maintain something above 45, 50,000, that's a pretty good position to be in.
That's exactly right. Because what's going to happen is once that deleveraging happens and Bitcoin retains its price and it starts moving a little bit again, then naturally. And then
everyone's going to leverage up again.
Go right back down. That's exactly right. People are going to go down to the local bank. They're going to get a car loan. And they're going to put it in Bitcoin.
Get a car loan. Well, in fairness, I did actually end up buying a car. So
I know.
I actually ended up buying 3 cars, which is funny. But anyway.
Oh, that's fantastic.
I've triggered
what cars did you buy?
Well, you know what I bought myself? I bought my dad a Jag, and
nice.
I bought my son his first car. Not the Audi R8 that I put online to trigger people as a joke, and they all lost their shit. I got my son his first car, but I'm still leveraged up because I didn't actually sell the Bitcoin to get them. I just bought them based on the. It's funny that low.
You can't tease us with 2 cars. What did you get yourself? That's what we want to hear. What was the third car?
I got myself an Aston Martin.
Nice. You do look like James Bond.
Well, I do, don't I? I considered applying for the role. I just think I'm a bit too old for it now. The funny thing was, I was leveraged in a way whereby I can't get triggered, right? Because I just took a bank loan. I've got cash flow to cover it. So what I did, Jeff, you don't know about this. So basically, when Bitcoin crashed to 17,500 on the run up, I was laying in bed and I just went onto my bank, Lloyd's Bank, and I was like, what's the most you'll lend me right now? And it was like £35,000. I just took the lot and I got like 2.55 Bitcoin. I was like, I'll take that. But obviously I'm not leveraged on an exchange. I don't have a stop loss. My leverage is different. So I can carry this. But it was like an interesting experiment in understanding how to play with credit. Because I've only ever played with credit in the past for buying things like houses and cars and shit like that.
Right.
This was the first time I ever used credit to actually take advantage of a market situation, which was a real like a bit of education for me. Somebody who's not a trader and somebody who's not played in the markets before. I was trying to understand a little bit of kind of like what Michael Saylor was doing. And now I understand if you understand certain market structures, you can play credit totally into your favor.
Absolutely.
So I get mocked. Some people on Twitter are like, "Oh, you're an idiot. You're so broke. You had to borrow money to like buy Bitcoin." It's not that. It was actually I just used a situation to my advantage. But I didn't. It was all new to me.
No, that's absolutely brilliant. By the way, when you were doing that, I sold my Tesla and bought Bitcoin with that. That's how much conviction I had.
You fucking legend. All right. Well, when this bull market ends, what are you going to get? What are you going to replace? Because you're going to have to replace that Tesla.
I don't know, man. I've got this 71 International Scout that I've been working on and restoring. So that's my car at the moment.
Wow.
But it can break down at any time, right? So I haven't decided what I'm going to replace it with. I don't know if it's going to be another Tesla. I always said that if Elon Musk ever sells Teslas for Bitcoin, I would buy it. But I don't want to part with my Bitcoin. So it's a bit of a rough situation. So it might be a Tesla, it might be something else. I haven't decided yet.
I tweeted. I mean, of course, he's not going to reply and give a shit what I say. But in the 2017 bull run, I tweeted Elon Musk saying, "I will buy a Tesla off you if I can buy it with Bitcoin using the plain Wi-Fi at 35,000 feet." That's the transaction I want to do. I want to do it in the air at 35,000 feet, crossing the Atlantic. But you never replied, so I didn't do it. So
And now you have an Aston Martin.
I'm like Elon. Aston Martin now, baby.
Yeah, I have no access to Elon Musk either. It's great, but I'm a big fan.
Yeah, big fan. Hopefully he'll come on the podcast one day. Hopefully. Fingers crossed. All right, cool. Well, look, this has been super useful. Is there anything I've not asked you? Anything else? Any other messages you want to tell? Anything about these ETF things that you think people need to understand?
Well, if I could leave last parting words, and I think this is really important, right? Because a lot of people that have been around for a while, and I mean in the Bitcoin community, don't necessarily like an ETF because not your keys, not your Bitcoin. But my parting words is this: there's a whole spectrum of comfort that people have in technology, right? And there are people that are way smarter than me that know how to set up their own wallets, buy their own Bitcoin, hold them in the wallets, hold them forever, and they own the keys, they own the wallet. That's great. I've tried that. I've realized that I suck at that. If I'm just holding just Bitcoin and I want to hold it somewhere I trust, it's going to be somewhere like Casa, right? I mean, Jameson's a trusted person. They help you manage your keys. It's a great place. So that's kind of like the next level of comfort for people that aren't very technical. And then for people that don't even understand that, this is a great instrument to hold your Bitcoin in, right? It's only 1% of the people are actually going to hold it in self-custody wallets. Maybe 10% will hold it with somebody else, like a Casa, and then the other 80% or more, they're not going to do anything until there's an ETF, right? It's really the best instrument for a lot of people that aren't comfortable with technology.
Yeah, great. Jeff, any parting words you've got?
Yeah, just to put a couple sprinkles on that ETF cupcake, it provides access, it has liquidity, and it has a layer of security, which it is regulated by the SEC. So that exchange traded fund, which an ETF stands for, exchange traded fund, that security layer in there, I think it does make a difference. Even if you're not recognizing right now, I think embracing that, it's a positive, it's an uptick. So I get excited about ETFs, and you've seen them around for 20 years, but this global adoption of ETFs, not just for a Bitcoin ETF, but for all different types of ETFs, I just think you're going to continue to see assets be attracted into that ETF vehicle.
Awesome. And if people want to find out more about Valkyrie, where do they go?
ValkyrieInvest.com. Our website just went up.
Right, I will stick that in the show notes. Jeff, great to meet you, man. When I'm in Chicago, I'm gonna come and find you, and I'm gonna come to the pit and see that.
I look forward to it. Awesome being on. Thank you.
No worries, dude. And Steve, I'm gonna try and bug you to come to Mexico. I think you should come. I'm gonna try and bug you.
Okay, you know what? And I'll probably see you in Miami before that. So
yeah. All right. I'll see you in Miami.
You can twist my arm there.
I'll twist your arm. We'll grab a beer in Miami. All right, guys. Are you coming to Miami, Jeff?
I will be in Miami. They're only letting me in for 24 hours, so I will be there. So I hope we cross paths and have a libation.
Let's do it. Let's try and get a beer in. All right, guys. Well, listen. Thanks for coming on. Thanks for answering all my questions. Good luck with this. Love what you're doing, right? And peace out.
Thanks so much.